We've been talking a lot about what's going on with the Canadian dollar. Certainly when we started the week and you saw people worried about the stock market sell-off, they were looking for what seemed like a safe haven asset in the U.S. dollar, and that buying came at the expense of our loonie. As for what lies ahead for the Canadian dollar, Adam Button, the chief currency analyst at ForexLive, joining us here in studio. Nice to see you. What's on your watch list when it comes to what's going on with the Canadian dollar right now?
We've had this amazing washout this week, and it has challenged really every trend in markets. Now we're at the lows of the year in the Canadian dollar. I mean, it's only 6 weeks into the year. But right now, oil is looking awfully vulnerable. We had some oil numbers from the U.S. out yesterday. Huge jump in production. OPEC can't be happy, and there's this glut that continues in the Canadian pipeline. You're
getting into a very important story. We like to connect the dots on what moves what, and a lot of people like to talk about oil, and they like to talk about the relationship with the Canadian dollar. We actually saw the C.D. Howe Institute come up with a fresh report where they say commodity prices not the best predictor of the loonie. And why don't you sort of walk us through what does drive the loonie when it comes to what's happening in the oil market?
Right. Ultimately, terms of trade is the main decider of the Canadian dollar, and we have a $25 discount in Canadian oil every single barrel that's sold because of pipeline pressures. Now, we had trade balance numbers earlier this week. They were a tad on the soft side for Canada. We have a major trade deal in negotiation that once again looks like it's on very thin ice. And ultimately, demand for Canadian products and services is what's the driver of the Canadian and investment in Canada. Now, you have a housing market that's weakening, or is at least softer than it was a couple of years ago. And you have all commodity markets just aren't as strong as they were, although they've bounced back. And will that investment start to ramp up now, or is the market going to be a little bit more jittery?
Okay, in terms of the oil market, a couple of lessons our viewers have learned over the course of the morning. Number one, we're going to get some new policy today when it comes to approving pipelines. And obviously there's the potential for that to play a role in indirectly addressing that discount that our oil gets. We'll see what plays out there. But we also heard from Andrew McCreath earlier suggesting he just feels like that discount for Canadian oil is actually not going to go away. It's actually going to get more significant, call it over the next year or so. If that happens, what does that mean for the Canadian dollar?
Yeah. I mean, speaking of pipelines, every morning I wake up and hear this pipeline story. I think I'm in some sort of bizarro world. Like, it's the cheapest, safest, most effective way to move oil. Right. And this debate won't go away. Nobody wants to challenge it. Oil will never make it to the West Coast, it seems. So, and at the same time, U.S. shale is exploding. Investment is coming in. This corporate tax cut, Exxon talked about investing in shale in a big way with this. You know, by 2020, shale might be, the U.S. is producing now more oil than Saudi Arabia at 10 million barrels a day, 10.2. That could be 11 by the end of next year. And Canadian oil is trying to get to those same refineries. And right now we have this North American glut that's coming, and Canada is the big loser in it. And it just seems to be no solution. Hardly, maybe we're going to see some leadership here now, but the timeline now is too tight to fix it. This is something that should have been dealt with 10 years ago, and it's getting worse. It's getting slower. I mean, we talk about the government stepping in, but it's really hard to believe they're going to be able to force this through and get anything done in terms of this glut. And looking ahead, yes, this glut might even get worse in the years ahead.
And what would that mean, do you think, for the Canadian dollar?
No, it's absolutely a massive headwind for the Canadian dollar. I mean, it's billions of dollars a year lost on discounts to refineries. And so, it's that, and it just shows that Canada isn't getting it done in the commodity sector, which is our bread and butter.
So if you're looking at different currencies this year, what should people keep in mind globally? We spent so much time talking about the Canadian dollar. We talked about the Canadian dollar against the U.S. dollar, but what else is worth watching right now?
Well, the interesting thing this week for me in the shakeout was how poorly the bond market performed, right? Yields came down just a little bit in this panic in the markets, and now they've popped right back up. You have yields everywhere moving higher, and I think these higher rates are going to crush commodity investment because these are double B rated borrowers, a lot of them, and they're just not going to be able to borrow at good rates, especially the marginal producers. That's really going to hurt Canada. places that are growing and yields that are coming off the bottom are Europe. Japan is doing very well, and I think that's where the investment is headed, and those currencies will be strong.
So you're saying the money that flows into Canada's bond market will not be as significant as the money flowing into some other currencies to buy into the other bond markets where people are trying to get some of that yield?
Right. Well, there's two things. There's this corporate investment, and that is going to be spooked, I think. Where you have higher yields in government bonds, I don't think that's going to be a factor till you get up to around 3.5%. So right now in US 10s, we're at 280. Canada's lower. If we get up to around 350, then you get this sort of this carry trade, especially if volatility stays low. But until then, I think it's more about the corporate side of the bond market, and there could be troubles ahead.
All right. Adam, always good to get your take. Thanks so much for joining us. Adam Button, Chief Currency Analyst at ForexLive.